When we talk about value of something, we talk about two things: market value and real value. Market value is the price at which something can be bought or sold. Real value is the benefit that a thing actually provides. In goods and services, this benefit is want-satisfying power. In financial instruments, this benefit is payment that the instrument issuer makes to the instrument holder. Given that Bitcoin is a financial instrument, the same as stocks, bonds, or fiat currencies, this is what we will be focusing on. So, what do we mean by benefit in the form of payment? Well, it's simple. When a corporation issues a bond, it pays its holders interest over the life of the bond. Also, on the bond's maturity date, it pays principal. When a company issues a stock, it pays profits to its holders in the form of dividend. Also, the company has equity, and if it were to be liquidated, the stockholders are paid the liquidation value from this equity. When a bank issues dollars, it pays its holders interest. Also, when dollars are taken out of circulation through loan payments, dollar holders are paid non-monetary value. Alternatively, they are paid collateral. Here is a short explanation of how the last two payments work. When banks create dollars through loans, and borrowers put them into circulation, those who become dollar holders actually borrowed their goods and services to borrowers, while dollars are only records confirming that deal. That is why the borrowers must pay back the equivalent of these goods and services to dollar holders. This happens when they take dollars out of circulation with their loan payments. The goods and services that dollar holders received in that way are what we call the payment of non-monetary value. Such payments are made every day, since the banks receive loan payments daily. In the event the borrowers default on their loans, and thus fail in these payments, the banks will foreclose their property that was pledged as collateral, and sell it to dollar holders. This is because issued dollars are the liability of the banks, and they are as such recorded in their balance sheets. So, this is how paying collateral works. These payments are therefore what was meant by that statement. Payments are the only reason the financial instruments exist in the first place. Because, what would be the purpose of a bond that never pays interest and principal? What would be the purpose of a company with zero equity that never pays any value to shareholders? And what would be the purpose of loan-created money if loans are never paid back? So, payment is the only purpose of financial instruments, and also the only factor that determines their real value. Namely, out of two bonds that are identical on everything except their principal, the one that pays more principal will obviously have higher real value. The more profit or equity a company has, the more dividend and liquidation value it will pay, and the higher its real value will be. If a currency has a higher interest rate, it will pay more interest, and its real value will be higher. Also, a currency that pays less non-monetary value due to inflation will have the lower real value. And this finally brings us to Bitcoin. This financial instrument differs fundamentally from the above instruments. Namely, after Bitcoin issuers put Bitcoin into circulation, they pay nothing to Bitcoin holders. They pay no interest. They pay no dividend. Also, they never take Bitcoin out of circulation in order to pay the non-monetary value. They pay no principal. They pay no liquidation value. They pay no collateral. They literally pay nothing. Moreover, Bitcoin issuers are anonymous. Now, in the above examples, we have shown that the real value has a direct causal relationship with payment. The more an instrument pays, the higher its real value will be, and vice versa. The less it pays, the lower its real value will be. So if Bitcoin pays nothing, what is Bitcoin's real value? Well, it is empirically impossible to be anything but zero. If it pays nothing, it is worth nothing. So, the real value of Bitcoin is zero. With that being said, it is not hard to figure out that Bitcoin operates the same as classical Ponzi-like schemes. Namely, the organizers of such schemes also pay nothing to scheme members, meaning the only possible way for these members to be paid is with funds of new investors, funds that consists of payable financial instruments or goods and services. This is how Bitcoin operates. It pays earlier investors with funds from more recent investors. Therefore, Bitcoin is a classical Ponzi-like scheme. It is just that it is dressed into new, digital uniform, and loaded with lots of technical jargon. Given that in Ponzi-like schemes, no value exists, except the one brought by the new investors, all such schemes eventually collapse. Bitcoin will meet the same fate, and collapse as well. It is just a matter of time.